Well, hello members, LA here. It is March 1st, 2015, so the start of a new month. That brings with it, of course, a lot of new economic data releases and so forth. We'll talk about that as we get going here. As far as last week and what happened, it was kind of sideways. Pretty much, the NASDAQ continues to push, S&P continues to pull, everything else kind of, not doing much. And up on the year, but we really didn't get that rotation I was looking for. And as a result of that, these markets really couldn't move. I had said Wednesday, I believe, or actually in Thursday morning's notes, that we had the best chance for some sort of a retrace that we've had for a while. That didn't happen until Friday afternoon, but it did start to set in, and we'll look at that as we get going. Before I say any more, let me apologize for being late. I usually get this out before noon my time, 2 o'clock Eastern time, but I'm running pretty late today because I had some errant query that destroyed a bunch of data on the server. So I apologize for that, and of course for this being late. So without further ado, let's pop into this and see what we got. Uh, you know, from a quick review, I don't think much changed last week, other than some profit taking that kicked in. And that happens usually at the end of the month if it's going to happen after you've had a good month. And that is what we got. And it also happens to happen right in front of the QE program. And if you think about it, major institutions, the way they move money around, it's not just, we just decide one day we're going to do something. They plan it. They get together, they plan it, and then they execute on it for, a week, 2 weeks, because they're moving a lot of money. In this last month, ever since QE became finalized, and even before that, we saw a fairly large run-up in the European markets and elsewhere in anticipation of QE. And now that has, that initial surge, if you will, has already taken place. So I suspect what we're going to see is we're going to see QE Europe, that push in those equity markets, slow down as a result of that implementation of the programs by the various institutions has already taken place. It doesn't mean we're going to drop as much. It just simply says, okay, the big push has probably already taken place, and I doubt we're going to see this sort of the run-up we've seen continue unabated. It also fulfills what we were looking for in the short term on the charts, and that was what I was just talking about, with some sort of a pullback as a result of that over-under. So let's quickly take a look at that over-under, and I'll show you what I was talking about. I'd said it, it happened on Wednesday. It actually came on a little bit heavier volume, pulled back a little bit on Thursday, but not much. And then Friday, we actually got a decent-sized pullback. Now, we'll look at this a little bit more as we go, but the natural place on this particular chart, of course, is to come back into this retest regenerate zone. That would be the natural place you'd expect this thing to come back. You have your wide price spread bar recently off a test of that low. For it to pull back into here, it would be normal. I mean, it would not be abnormal at all, in my opinion. So when I'm looking at these charts and I'm looking at that, where could this thing pull back to? It definitely could come back that far. If we look at like the NDX, the NASDAQ composite, these things are so extended. And the good thing is that that extension is working itself off in terms of a sideways move versus a move down. But I would not be surprised to see some sort of a push back down on these indexes before this thing takes off again. And I think that's true here. And I also think that that's probably true on the broader NASDAQ composite as well. We saw a little bit of profit taking set in on both of these on Friday. I'll be curious to see if they come back and do something deeper. And again, just like we saw on the S&P 500, the area that I'm looking at is this wide price spread bar on the way up. If you come back into the bottom of that range, that would be sort of a normal correction that one should or could expect. And so that's kind of the thing to be watching on the way back. If we look at the negatives, this that we just talked about, the 2-3 bar extensions fulfilled on weekly charts, and that's on the indexes and as well on the some of the sectors and a couple of them. And what I'm talking about here is, remember, when you break over a swing point high and you do it on multiple time frames, typically what you're going to see, right, the probability suggests that you will see 2 to 3 bars extension in the direction of the break, and in this case it's a break to the upside. So bar 1 is there, bar 2 is here. And so we've had 2 bars. We may get a third one, but usually 2 to 3, right, before you get any kind of a retrace to set in. And that 2 to 3 doesn't have to be higher prices close on the weekly, but usually you get some sort of higher price at least hit on the weekly. That happened on the NASDAQ. It also happened on the NDX, and we also saw it. To some extent, although it really didn't have a break of a swing point high because we never registered here. But we kind of got, pull it back here. We kind of got that 2 to 3 bars, right? You kind of got 2 bars here as well. And actually, I didn't show you on the NASDAQ because that was the daily, but you can see the 2 to 3 bars taking place here as well. So 2 to 3 bars extensions, and that also took place not just here, but on a couple sectors as well. If I pull up the sectors, the XLB was one of those, and if we look at that one, you can see it here on the XLB. So here's your breakout, 2 to 3 bars. There's the 2 bars that have taken place already. And we also saw it on the XLK. In the XLK, of course, technology also break 2 bars so far. And so those things, right, have extended. And when they've already extended, that says, hey, they may not go anymore. And that's on a weekly time frame. We've also got, if we look at the sectors a little bit more deeply, we've also got the XLE here pulling back. You can see it on the daily and potentially setting up an ABCD structure now on the downside. And we'll have to see if it actually, catches wind. Now it's up to this point, but will it project lower prices to come in this sector or not? Because we've actually had a retest, regenerate a bearish one, right, off that break. And so it's come back into that overlap right here. You got into it on this bar. Now it's trying to regenerate down the other side. XLI, also the same sort of setup here in that this one's trying to pull back. It's doing it on an XLI, is doing it on the daily. Here's the swing point high, and that means that we could see some more pressure here, coming back in, doing a retest, regenerate off that prior high. And we also have that same setup on the XLF. And so when we look at the negatives, right, here's the swing point high. It's doing the retest regen right now. And I don't know if it's actually going to hold because it doesn't have a lot of room to work with, and it's right on it. So when we look at the negatives, those to me are probably the most negative things that are out there. On the positive side, right, we know that from a positive perspective, we have ABCD structures that are in place. And if I just pull up the numbers here again, I've advertised these before, but they're still in effect. Anywhere from about 2130 up to 2140. That's the range projection there. The ABCD is up to 2131, and you can see the large range projections that are still in place. Now, typically when you get the first retrace off of some sort of a surge, it's likely going to be blocked. And so if we go back to the sectors, or actually the indexes, and we take a look at these indexes one more time, we've had a huge surge off these indexes. And I'd be very surprised if this thing just turns tail and heads south. In other words, I don't think we're going to see it come, way back down here somewhere. More than likely, it's going to get some sort of a retrace, and then you're going to find buyers. And I expect that somewhere in this price range, low of this bar, which is 49.05, the high of that bar, which is the first thrust, 48.93, I would think that would be a great place to see buyers step in. So, 40 points lower, 50 points lower, you can expect buyers probably to come back into this. And so that first surge usually sees buying The question always is at what point, and we don't know that until we see the range break, this range pullback, until we see how it develops. In other words, do we see volume coming into it or not? Do we see key areas either here or on the indexes or some other place, on the sectors, give us some sort of an indication of what's going to happen? And that's what you have to look for to try to gauge what that first pullback is going to look like on the way back. We do have some strong sectors. I was showing you some weak ones a while ago. Well, there's some strong ones out there too. I mean, it's not like they're just all weak. For example, the IYT, the transports, this has come back. It's doing a bullish. It's already in this. And you could actually put this on the negative one too. It's doing the bullish retest regen. But I like the way it's coming back in with absolutely no volume into this big wide price spread bar. But the two that are really looking the best is the SOX. And so if we look at the SOX real quick here, SOX makes the break. And I still have some problems. This is what I was referring to when I was talking about the data I destroyed. So the SOX has some data destruction still. These programs are running. That's why I delayed it as long as I did to talk, because it's running right now and it's correcting the errant query I ran that blew away the data, or actually distorted it horribly. And so anyway, the SOX, though, as you can see, has this nice big push up and it's continuing. And we also have that on the XLV. So the XLV, remember, broke out. These, not so much the SOX, but the XLV, the XLI, remember we were talking about rotation? Well, the XLV has the rotation still going. XLI pulling back doesn't. And so we have this situation where data, not data, but the breakout itself in these other sectors to support the major rotation that needed to take place to not get a pullback just really hasn't developed that much. And I believe as a result of that, we're probably going to get some sort of a pullback off of that. When I say all that I've said, and it's a lot of data I threw out there in charts, the main point is that what we have out here is a very mixed market. And I could easily see us, chopping around for another week or so, especially with the, the new month and all the data that's going to come out on the new month. You've got some rate decisions in, I think, Australia, the ECB, England have rate decisions. You got all those PMI numbers. From a fundamental perspective, the QE in Europe is already upon us, so probably that buying has already taken place. On the flip side, central banks are still accommodative, or the earnings are over, so that's going to take away and not give us all that jostle that we had going. But it's still very mixed, right? And we've had the big push, right? So when we look at that big push, it's already in the cards. It's already happened. And so now you can expect some sort of chopping around, and I believe that's probably what we're going to see in these markets. And I wouldn't be surprised to see this come back into the retest regen and trade back into that 2100 to about 2090, 2095 area. Would not be surprising at all. So what would I be watching in the coming week? Really, my focus would be here. We got this mixed picture. The rotation has been so-so at best. Bullish retest regenerates, fulfill, and start higher. If that happens, right, we've got like 4 of those taking place, and we've got potentially on some of the indexes, especially S&P, doing that. The other thing that you really have to watch is the dollar and the bonds, and I haven't talked about them all that much lately because they've behaved, but Friday and actually last week, man, this data is so screwed up you can't look at it. Let's look at it on the weekly. At least there we can see the data. If we look at it here, right, that high 25.21, we're at 25.20 on the close. So we're right up there, pressing up there, trying to get over again. That volume, that wide price spread bar is probably going to hold. If it does, this continues to build out some sort of a range, which will allow the markets to continue to work higher. If this doesn't and it starts to push higher, that's going to be a real problem, and that's going to be a real issue. And so what we have to be very careful of is, do we see the dollar start to break out and extend? If it does, I think that's going to be a lot of pressure on these markets, and that's going to be a lot of pressure to overcome. On the bonds potentially have that ABCD structure going the other way when we look at them on the monthly. And what I'm talking about here is we have this push down and now the push back up. And remember, we were coming back into a price point. There was a high volume bar back on January, early January. I think the top was about 132.5 or so, and it kind of relates to this bar here. That's 132.49. You can see the volume on it. Well, we came up last week. We did 47.6 on a weekly into 54, got into that bar, didn't get to the top, but that may be all it's going to do. If that's true and we get an ABCD structure down to test this low, that also would be, a check mark for the equity markets. It would be the positive sort of thing they need to push higher while bonds push lower. And so if a dollar can go sideways, and if the bonds can either go sideways to slightly down, I believe that would give the equity market the room over the next few weeks to actually go up and press higher. And so that's probably the main things to be looking for this week, is how do those things play out and what happens with them. As far as economics earnings, you got a lot of Fed speak again. Yellen's on Tuesday, then you got 3 more speakers on Wednesday and another one on Thursday. So as they're out there, talking about whatever they talk about, they can move markets, although this seems to be a little bit more muted. And the one thing that Yellen did last week in her testimony to Congress, the Humphrey Hawkins bill, the Humphrey Hawkins testimony, is she basically laid the groundwork to remove that key term of patience in the next meeting. So I think what we have here is a period where the Fed is going to remove that, and that they've been trying to set the stage to say, oh, just because we remove that patience doesn't mean we're going to move. It just says that we're going to sit there and evaluate this every meeting, and at some point we could raise rates. And so they're going to leave open that idea that it's, at least June or later, but they want to get that off the table so they can move if they have to. Last week we saw negative inflation rates. If you take the overall rate, not just the core, Fed keeps saying, hey, we're at 1.6, 1.7. Therefore, we're going to see this market, the inflation part of this market, back up around that 2% target. We've got our employment rate where we want it. Therefore, we probably should be able to, raise rates. I think they're ignoring what the dollar's doing and what the dollar's going to do if, in fact, they do that. And so I think that's going to be the big thing going forward. Looking at the rest of the news here, right, first of the month, you always get PMI numbers, so you got a slew of them tomorrow. That economic data has not been positive. We'll see how these numbers come out, what they do. My guess is they'll be so-so at best and probably not help the markets. We've got announcement here out of Australia. You got the Bank of India also doing its thing. Some more PMI numbers on Wednesday. We got the Fed speakers we've already talked about. Then you got the Great Britain and the Eurozone doing their announcements, and then we finish up with some more, especially the employment number on Friday. So a lot of data this week. If we get a lot of news flow, it's probably here. This is what's going to move it. Geopolitically, nothing really happening. What's my bottom line this week? I think last week, as I said, we had the best opportunity after Wednesday's over-under. It took until Friday to really get a kick in, some profit taking, but it did start to happen. I kind of think it's going to continue, and we're going to get a little deeper pullback before we get any major move. But underscore this, these markets are very mixed, and even though they may get more choppy, right, it likely is simply going to set up the next leg higher to go up and hit those targets up around on the S&P around 2131, 2140, and maybe as high as that 2180 number eventually. And so I think that, you know, what we see come out here next week is simply going to set the stage for another move to the upside. Okay, so what are we doing in terms of our portfolio? As you know, we're fairly well invested. It's not as if we don't have anything on. We do. We're like, you know, I think it's 65, 70%. I still want to take some target profits as we go along in here. I did a little bit of that with the SNE. I did a little bit more of that the last couple of weeks. We did put on a lot of exposure on this spike up and got some good gains off of it. But we want to do some buying on retraces. We want to do some selling on surges, and that's what I've been trying to do. And if we do get some sort of a push higher this week, we would want to sell some into it. Now, if it turns out, going back to this chart, and let's go back to the S&P 500. If we end up, just doing something like this, right? Or maybe even as low as here, but we just kind of go sideways for another week. That to me is the kind of consolidation after a nice big strong push up, right? To work off the excess, not in terms of price, but just in terms of time, right? And that would be bullish. And if that happens and we never get, the little sells up here that we're trying to make in some of these individual stocks, the farther we go out in time without giving much back in price, the higher the probability that you simply don't want to sell that first surge out of there because it's probably going to surge a lot more. And so, that's something we'll just have to monitor and keep, on our radar screen, because, we could consolidate for a couple weeks, or we may just start heading higher again, or worst case, right, this thing may break down and go back the other way. But however that situation may be, if it's the sideways move, right, around in this area for, a couple weeks or something, then that probably sets up the correction in terms of time rather than price. I want to look at a couple of stocks here this afternoon. The first one's Deere. Now, Deere was a stock that I was trying to put on and did put on, and what we were trying to do there, let me grab the stock. What we were trying to do there was buy that breakout situation in the fade for a move back up to test that high. And so we were looking at this, let me draw onto this here. We were looking at this bar, right, the top from all that big surge, and then we actually had a big surge bottom on earnings. And we were looking for a test of this area first to sell into, make a little bit of money. This was the stock that we put on this week. But instead, with the market weakening, what happens? Well, most of the stocks are going to come back down. This looks like it's going to come back to test this area now. I originally thought I would put some more stock on immediately, but as I always do, I don't come up with a plan and stick to it no matter what. I adapt to whatever happens, and I think that's important in your trading, is to adapt. And so as this comes back, what I'd like to see now is I'd like to see how does it deal with this bottom bar. If it comes in here and holds it, right, and then starts working up and the general market starts working up, then we can put it back on up here somewhere, which was the original plan, which was this retest regenerate zone. And right now, so far, this is still looking good, this retest regenerate zone. So if we get a deeper retrace and it still is in this area and it holds and the general market starts to look better, then we might want to put on that second position. But right now, it's kind of wait and see. Let's see what happens. Don't force a trade. We have enough exposure. We don't have to put more on at this particular time. And so that is just a trading thought that I want to leave with you. The other one has to be with Zeltiq. Now, Zeltiq was supposed to report their earnings last week, but they didn't. And so they pushed it out, which is common. You don't know. What they do is they put those earnings numbers out on expectation based on the last sets. And sometimes the company itself moves it around, especially the smaller companies. Well, they did in this case, and it's Tuesday. Well, Friday, this thing sold off big. And although it recovered almost all that price, when I see something like that, wide price spread bar, increased volume, in front of a news event, a known news event, that makes me think somebody knows something. And whether that's a wide price spread bar to the top side, which was like in CYBR. If you remember that stock, we were looking at this post earnings, or pre earnings. We were trying to get into it. Remember CyberArk actually. We saw this build up taking place before these big ones. Right, these two bars were big, and that made us think that we wanted to try to get in. We had an order just below. Is like, I think we missed it by 10 cents or something. We had an order just below to get into this, and look at what happened on earnings. That kind of a spike, right? This build up here that was taking place was pre-earnings. That was the earnings day there. You got a big spike up as a result of it, and then of course a subsequent spike after it. That's somebody knows something ahead of time. Right? Well, it's no different here in Zeltique. I wonder if somebody knows something ahead of time here. In other words, 2 days before earnings, all of a sudden you get a big spike in price. And, I don't want Zeltique, I want Zeltique. Let me get the other one. You get a big spike up, or excuse me, down, volume increases, and even though price comes back up, that worries me. And so you're going to see an order in here to take some profits, get a little bit skinnier, because this thing could trade all the way back to 27 and still be a buy, and we're at 35 or 34 right now. So $7 off of 34, that's 20%. We could get a 20% decline, and that would be the buy. So we don't want to sit here and hang on to everything when we get some sort of a red flag right in front of a news event. So you'll see me try to take that off tomorrow. Okay, again, I apologize for being late, and I believe this data will be restored fairly soon. We've got the programs running. I totally messed up today, and my fault, and sometimes I do that. I try to be careful, especially in production, but today I screwed up, and it affected you. So I think most of the stocks are repaired at this point, but there's a few left. Probably take another hour and a half at most to get the rest of them done. So if you see some of those strange looking charts, just bear with me, and we'll get them up to date here before much longer. As always, I thank you. If there's anything I can do to help you, you just drop me a note. And until next time, I guess I'll leave it at that. Thanks a lot, folks. Take care.